18 months ago, Melbourne wasn't hot.
It was the worst state to invest in.
I think that's when the land tax was introduced. A lot of investors were deterred from going down to Melbourne or Victoria.
That's right.
When you purchased your property in Frankston North, the Melbourne market started steaming up around February, March 2025. So in 1 year, it grew by, let's call it 19%. So just under 120 grand.
Over 120 grand.
120 grand in growth and wealth just increased in less than 12 months. Mate, that's more than an average salary out there.
Hello, everybody. It's Sean Singh here. Welcome to another episode on PropSpotter. PropSpotter, the smarter way home. Today, I have with me Tony Shao from the mortgage agency. He's come into the office and we're going to talk a little bit about the top 10 suburbs to invest in Melbourne in 2026. So let's kick it off.
So Big Sean, thanks for joining me, mate.
Pleasure's mine, mate.
So buddy, the reason why I put you in today, as always, because you're my research guy, you're my data guy. Okay, so obviously we have clients together, but apart from our clients, I also have clients myself that has purchased in Victoria, in Melbourne, or that shebang. Okay, now they've been purchasing, or we've been purchasing for our clients way before the boom, way before the boom. Let's call it
18 months ago.
18 months ago, right? And you purchased it yourself. Right, and we'll go down just the suburb that you purchased in, right? So really, 18 months ago, Melbourne wasn't hot, right?
It was the worst state to invest in.
100%.
I mean, nothing was happening.
100%, and I think that's when the land tax was introduced. And
Correct.
that's why a lot of investors were deterred from going down to Melbourne or Victoria.
That's
okay?
right.
We're going to talk about Melbourne, okay, as a little location, not Victoria as a whole. Okay, because I
Correct.
think Melbourne itself is like a spot of its own. A spot of its own. Yeah?
Largest capital city,
Yeah.
5 million population growth and growing year by year, 150,000 people moving there each year. There's so much going on in Melbourne.
Yep.
I think it'd be unfair to just go and classify
Exactly.
Victoria as its own bucket.
Exactly. Let's just draw down on Melbourne itself, right? And we're going to use you as an example. Okay, so look, I think the first client as an investor that was in Sydney that purchased in Melbourne was 18 months ago, 17 months ago, something like that, when it was still very, very cheap, affordable, not much competition involved, all that shebang, okay? But I reckon the last group of people that would have made good money in Melbourne purchased just when it started slowly ticking up was around November, October 2024, which is around when you purchased your property in Frankston North.
That's right.
Yeah? And if I'm thinking about it now, the Melbourne market started steaming up around February, March 2025. It slowly started getting some traction, slowly. And I hate to say it, it was all your BAs pumping the area, guys.
They needed somewhere to buy.
Right, but you know what? We had Sean here that looked at the data before it got too hot, right? So we like to look at the warm spots that's ready to go, bang, the hot spots. And that's where you probably made a lot of money, okay? So the purpose of today is to talk about how Melbourne has performed, the top 10 performing suburbs in Melbourne. And it's spread out pretty much. It's got a good spread, isn't it? The different areas, right?
It definitely does. So before we get into it, Melbourne overall last year did about 4%, 4.5% growth, 2025 calendar year.
As an average?
As an average across the entire place. The suburbs we're talking about today, all of them have done over 10%.
Yep.
What's interesting, right? And I think, Tony, you pointed this out while we were reviewing the data. 3 suburbs in the east, all 40 kilometers or more from the CBD, up against 7 suburbs in the west that are 20 kilometers or less from the CBD. So what does that tell us? There's a bit of a gap there, right? The stuff in the east from 0 to 20 hasn't really shifted or has shifted less than 10%. And the suburbs that have shifted more than 10% for detached houses on land were all 40 kilometers or more.
And don't give them too
from
much
the
detail,
eastern
buddy.
shore of Melbourne.
Not too much detail because we're going to drill down on it.
Yeah.
So we want our audience to read and watch this whole episode. So we're not going to give you everything right now. Okay? All right. So we're going to pinpoint and drop down hints what we look at and what you're looking at with our data when we are actually advising our clients where we're going to invest.
That's right.
Look, we used a lot of data points. In pinpointing certain locations where we have interest in. We're not going to go through all of them, but we're going to go through the main ones.
Yep.
Okay. So yes, you're right. I've done some homework. Okay. Sean, mate, the data you gave me, top 10 performing suburbs in Melbourne the last 12 months. Top 10. Now, We're going to show them the list. I think the list will pop up somewhere right now, okay, with the screenshot, right? We'll make sure it's available on the video for you to have a look right now, okay? So, Sean, give it to me. The first suburb top performing in Melbourne. What is
Number one, Frankston North, also voted the same by the AFR, 19% growth in 1 year.
In 1 year, guys. In
Right.
1 year. So essentially, so let's put that in perspective, because you bought in Frankston North. How much did you buy it for?
I bought for $625,000 in October 2024.
625. So in 1 year, it grew by, let's call it 19%. So what worked that out? So what's that? Just under 120 grand.
Over 120 grand.
120 grand in growth and wealth just increased in less than 12 months. So in 12 months, right? Mate, that's more than an average salary out there. That's
Oh,
more than
definitely
average
is.
salaries out there.
Yeah.
Yeah?
Yeah.
Okay, so tell me about it. Why? Because that suburb's actually interesting because that was the first suburb that popped into my mind when I looked at the data. Frankston, North Frankston, Carrum Downs.
All three on the list.
All three are 40 kilometers away from Melbourne CBD.
Correct.
Why is that?
Yeah, so I think there's a few things there, right? Firstly, let's talk about the metrics. Price change in Frankston North 1 year, 19%. Price change in the last 10, 135%. The rental yield as of today, January 2026, currently sits at 3.3%. But what you've got is essentially 2,700 dwellings and a lot of buyers who want to get into Frankston North and Carrum Downs. So you've got restricted stock and housing supply, scarcity of land, no new available land coming online in those three suburbs, and tens of thousands of buyers, first home buyers, upsizers, downsizers, and investors looking to purchase in those hotspots.
But why?
A lot of key reasons. One, Frankston's got that lifestyle and CBD status, which we'll talk about when we talk about Frankston. It's close to the beach, right?
Yep.
It's a metropolitan activity centre designated by the Victorian government. It has a university, Monash University, and there is over $1.1 billion going into the Frankston Hospital. So, you know, if that's not the Parramatta of Melbourne, I don't know what is.
And that's probably why.
Maybe a little bit far out to be a Parramatta, but
So there's those few variables. That's why it attracted you. Yeah. Obviously, there's a few more.
Correct.
But those were the main ones.
Those were the main ones.
So if you're telling me that's the next Parramatta, or to be Parramatta, let's call it next 10 years. Okay. Parramatta right now, house, what are you looking at? 1.5s?
oh, more.
1.5s?
1.5s will get you a little rundown 2-bedroom cottage, right?
Exactly.
You probably need to be close to $2 million to get something that you'd put a whole family into
Yeah. Yeah.
from a house. But then you've got lots of shops. You've got Eat Street. You've got practically a little mini CBD going there. You've got the Westfield. And Frankston's got the same. Frankston's got Bayside Shopping Centre. Frankston's got its own little CBD. It's got a whole big estate, university, hospital, major train station, and a beach.
Sure.
In addition to Parramatta, it even has a beach.
Sure. So let me ask you, so what's the percentage of owner-occupiers and investors out there for Frankston, Frankston North, Carrum Downs?
Yeah, so if I were to aggregate all those three, I'd call it a 70% owner-occupier, 30% split.
Yep.
You know, it's quite different between the three suburbs. So
Okay.
pretty high in Carrum Downs,
For owner-occupiers.
correct. Lowest is in Frankston North,
Okay.
right? We are sitting at about a 55% to 55% owner-occupied ratio and a 35% investor.
Sure. So let me ask you this next question. So isn't it owner-occupiers are the ones that's driving up the prices majority of the time?
Correct. And
Okay.
that's what's happening now in Frankston North, right? Because of the affordability,
Yep.
houses are being sold either from existing owner-occupiers
Yep.
or existing investors
Sure.
to first-home buyers and some
Sure.
investors that are trying to get into that market.
Sure. So would you say the last 12 months, a lot of the market has been eaten up by investors?
Not really.
Not
Not
really?
really, because what we're seeing is we're seeing some stock go to investors,
Yep.
but we're also seeing stock being renovated
Yep.
to look like the perfect PPOR. We're
Okay.
talking brand new kitchens, brand new bathrooms, right? Not your investor grade bathrooms, but even better than that, so that they can attract a higher price.
Sure.
A house in Frankston North sold probably 4 or 5 months ago now for close to just shy of $900,000. And it was fully renovated, decked out, brand new pergola out back, you know, the bells and whistles.
Sure. All right. Then let's talk about number 2 then.
Yeah, so Frankston North, Carrum Downs, right? All of them have stock on market of less than 0.3%, and that stock on market is trending down.
Yeah.
What that means is that supply is decreasing, and the amount of buyers looking into it, either themselves through buyers agents or first-home buyers, is increasing at a rapid pace. Public housing in those three suburbs stands at 9%, 6%, and 3% respectively. So all sub 10% from Frankston North, Frankston, and Carrum Downs. And it looks to be decreasing, right? Last year, public housing in Frankston North was 13%, and we're starting to see some of that also sell off. I drive around on the streets of Frankston. I was there a month ago. The place looks beautiful. Would I live there? Most definitely, right? And that's what you want to see. Now, one downside to these areas is that they're becoming slightly unaffordable in line with the median incomes, but that's both a disadvantage and an advantage because it shows that the area is probably set for gentrification as people with higher incomes slowly start to move in. Now, that's purely a hypothesis on my part, but we shall wait and we shall see.
And I agree with that. I think right now, look, this is what I think anyway. Okay, I think there's still going to be growth around the area because the median house price is slowly creeping up to the affordability of median income earners around the area. Robert, you're exactly what you're saying. It will get gentrified, and you'll see more people with more money slowly moving in there because where they want to buy closer to the city becomes too expensive.
Exactly.
Right? So this is what I call the trickle effect, right? So if you have a property worth $1 million right here, and it's a way above your median house price, so it's a median salary, you can't afford it anymore. So guess what happens? You have to go 5 kilometers away where it's going to be 20% cheaper and you can afford it, right? So that's what we call the trickle effect. And sooner or later, what used to be, let's call it less desirable, becomes more desirable.
100%.
Right? And guess what? When you have people with a bit more money coming into the area that has a bit more disposable income, guess what they're going to do? They're going to make the place look a little bit nicer.
Definitely. And we're already seeing that in Frankston, right? So second one on the list, Frankston. Frankston grew 15% last year. Last 10-year growth of 97%. So not a little bit less than Frankston North, but still something to clap your hands at. Rental yield slightly lower. But what we're seeing now is Frankston is turning its brand image around from very undesirable to starting to become desirable.
Yeah, sure.
3 new apartment blocks were just approved on the main strip. Right? Those apartment blocks are not your stock standard apartment blocks. They're going to have water views. They've been designed to look like beautiful apartments, not your bog standard stuff. And that is essentially going to drive in your downsizers who are selling up close by and willing to spend $1 million, $1.5 million on a 2-bedroom, 3-bedroom apartment with water views.
Yeah, sure. So let me ask you this question now, right? Because the prices are driving up so fast, right? In such a short period of time, and you just spoke about it, the rental yields sooner or later will start dropping. Yeah? So how would that be affordable as an investment grade property? Because you're going to be so negative geared sooner or later. When you purchased a property at Frankston North, what were you getting, 4.5?
I was getting 4.4 back then.
4.4.
And it's sitting at about 3.5 now.
It's sitting at 3.5, right? So if your cost of funds, call it
6.
Call it 6? Yeah. No, that's a bit lower than that, man. I think you're around 5.6, right? 5.6, and your yield is 3.5. That means your net yield is going to be around 3. So that means you're going to be short around 2.5 negative geared.
Correct. You'll be short around 2.5 negative geared.
Right.
And you have to be ready for that.
Yep.
The price increase really comes from the gentrifying population,
Yep.
right? And so over time, what you will see is people start to move in that have higher disposable incomes
Yep.
than the people that they live around.
Yep.
And over time, those other people sell up because property prices rise and desirability increases.
So sooner or later, what you're saying is there's going to be that lag effect. There's going to be that lag in the timing with, hey, do you know what? House prices are going up too high too fast.
Yep.
It's catching up to the medium income. Okay, so therefore, there's going to be a slow transition where it's just going to stay stagnant for a little bit.
Correct.
Then you're going to wait for your people with a bit more money coming in. And that's going to take the next ride again. Yeah?
That's right.
Yeah. So now we've talked about, Frankston and North Frankston, which is right next to each other. Okay. Now let's talk about Carrum Downs. Tell me about it.
Yeah, so Carrum Downs is on the other side of the highway, the M3 highway. Beautiful suburb, a little bit further away from the action.
Yep.
Got its own Guzman and Gomez, which,
nice.
I really rate for those watching. Breakfast burrito. But purely residential suburb, close proximity to the Frankston CBD. Also has done very, very well. 12% increase over the last 1 year and 115 over the last 10 years.
So what's the average price for Carrum Downs in comparison to Frankston, North Frankston?
So Frankston, you're probably going to need 850 plus these days.
Yep.
You may be able to get in slightly less than that.
Yep.
Carrum Downs, you're going to need 800 plus quite easily.
Okay.
Frankston North is the interesting one. Is that ugly duckling
Yep.
where you can probably still get in at 750.
You think, hey, it's north. You think it's going to be a bit more better, isn't it?
Yeah. And you know what's funny? Frankston North is actually sandwiched
Yeah,
by
right.
Carrum Downs on one side to the north,
Right.
and Frankston to the south.
So really, that's where the value for money came in. That's why it grew 19% because it's stuck between
The two.
two nice areas, and you're the ugly duckling that's getting sandwiched.
Correct.
And sooner or later, bang, guess what? That's why I said the trickle effect, right?
It's not bad to be in that sandwich, trust me.
So that's number 10, Carrum Downs. Number 10.
Yeah.
So fantastic. So all three suburbs in the same location grew by 12 to 19%.
Correct.
All right. So now I'm going to ask you another data point, okay, on the top 10. So before I even go down, just note down, just tell our audience what is the top 10, list by list.
Yep, sure. Number 1, Frankston North, 19%. Number 2, Meadow Heights, 15%. Number 3, Sunshine West, 14.2%. Number 4, Dallas, 13.27%. Number 5, Frankston, 12.97%. Number 6, Roxburgh Park, 12.87%. Number 7, Tullamarine, 12.68%. Number 8, Albanvale, 12.52%. Number 9, St. Albans, 11.87%. Number 10, Hilo Downs at 12.19%, sharing equal 10th place with Carrum Downs.
So let me ask you, right, out of all those 10 suburbs, how many have you placed your clients in?
5.
Not bad. Not bad. So look, I'm a bit more, okay, because obviously not all our clients are joined together. I would say out of those 10 suburbs, we have, in my portfolio, we probably had around 7 clients, different clients, that has purchased those areas with using PropSpotter and with using a buyer's agent themselves. Okay, so there was something a little bit more interesting I saw in the data, and I looked at how far they were away from the CBD, right? So out of those 10 suburbs that you just mentioned, Carrum Downs, Frankston, North Frankston, they're 40 kilometers away from the CBD.
That's right.
Yeah. But the other 7, they're 20 or less towards the CBD. So what I'm saying is nothing that was in between 20 and 40 kilometers, call it 38 kilometers or 39 kilometers away from the CBD, made it to the top 10. Why is that?
Yeah, I think if we actually look at Melbourne as a bit of a U shape from the CBD, we'll find that a lot of the population density is in the east, right? And so there are essentially Frankston North, Carrum Downs, they're all 40 plus Ks from the east. And so nothing 0 to 20 in that boundary sort of made it into the list purely because of the prices. And so in any city, any country in the world, at some point, people can't afford to pay that $2.5 million, $3.5 million, $4.5 million asking price. And so people go further and further and further out east until they land on the Frankstons of the world, which is where we've seen our price increases over the last couple of years. Will that then flow through back into, the Thornburys or the Elwicks? Those are the eastern suburbs for those watching in the 20 to 40 kilometer radius? Most likely. But it will be a bit of time before that happens, right? So will someone with a nice house in Frankston sell up and buy something in Elwick or Seaford? The answer is probably yes, but it will take us a few years before we realize those upsizes in the data as well.
All right. So now let's talk about the second top, which is
Meadow Heights.
Meadow Heights. Okay. So how far is Meadow Heights away from the CBD?
So Meadow Heights is 18 kilometers away from the CBD. It is undervalued compared to similar distances in the east or the south.
Yep.
And it sits near the Broadmeadows Revitalisation Precinct, right? So that's Broady, all the suburbs around it, Broadmeadows, Jacana, Dallas, and Meadow Heights have practically made this list or were just outside of this list.
Sure.
It offers one of the highest yields in Melbourne, right? If you can get it there, it's even higher than Frankston North at about 3.8%.
That's not bad.
And so it gives you a little bit more of a hedge.
Yeah.
What we're also seeing is we're seeing 0% stock on market. So the stock on market that's coming is getting practically snapped up in hours. And it's had a low IRSD score, but I can practically guarantee you that that's going to change. IRSD score.
So what about you tell our audience what it is?
IRSD score stands for the Index of Relative Socioeconomic Advantage or Disadvantage, published by the ABS, not made up by me, and it ranks suburbs or economic areas on a scale of 1 to 10 based on the household income of that area. And so Meadow Heights has historically had an IRSD score of 1,
Yep.
Vaucluse, for example, has an ERSAT score of 10.
Cool.
But with this stock on market and a lot of gentrification going on, it will not surprise me if in the 2026 census, we see that ERSAT score go from 1 to 2, 3, or even 4.
Okay. All right. So because you're saying there's 0% vacancy rates, so what this means is you either have to kiss the backside of the agent to get into the area.
Pretty
right?
much.
Pretty much. Right.
Yeah.
Or you'll know someone that has good relationships with agents around the area.
That's right.
Okay. And I'm not going to say who certain people in the industry can get those off-market properties, because I can guarantee you, if you as a consumer have a good relationship with the real estate agent down there, you can get in on those off-market opportunities. I can guarantee it.
Just takes a bit of work, but
Everything
it's
takes a bit
definitely
of work.
not impossible.
Right, unless you want to go pay 25, 30 grand on a buyer's agent yourself,
I wouldn't.
right? You wouldn't, right? Then go in there and get yourself. Use your service, then just build a relationship with the agents around the area.
That's right.
You know what I mean?
The next one I want to talk about is Sunshine West.
So Sunshine West, I've heard about Sunshine West years ago. I think back in 2016, 17, it was still there. Now, I believe back then, or it may be still now, is considered the Cabramatta of New South Wales. Of
Asian
Sydney.
Central.
Yeah, baby. Yeah, right? So yeah, right. Am I correct?
Yeah, I think you're pretty on the money there. Sunshine West, 15 kilometers from the CBD.
Yeah.
Right? 15 kilometers, median price sitting at about 850, 900 grand. Okay? That'll get you something nice. It actually has a super hub factor.
Okay.
So close proximity to the CBD. A lot of people from the west and even the north are employed there. Big industrial zone, and is very, very undervalued compared to all of the surrounding suburbs. Once again, there is a game-changing infrastructure project that's happening right now, which will essentially change Sunshine into a second CBD, boosting second CBD for Melbourne.
But you got Melbourne, then you got Sunshine, then you got Geelong.
Correct.
Right. So why would you need a second CBD? It was right in between, squeezing between both of them.
Because in this day and age, there's so many people in Tarnate, there's so many people in Truganina, there's so many people in Manor Lakes and Wyndham Vale that are commuting all the way into the city. And if they've got a closer employment centre 20, 30 minutes away that they can drive to, mate, it's a game changer.
You got a tailor for the Asians as well, mate, by the sounds of it. Okay, so tell me about it, right? So I've heard of Sunshine West years ago, 2016, 17, when I started the business, or a bit after when I started the business. I still remember average price. I remember the client purchased for around 620 back then. 620 with around a 450 rental yield. Okay.
Yep.
So what is it now again? Did you say?
That 450 rental yield probably hasn't shifted by much,
Really?
if I'm honest.
Okay.
Median price is now 850, 900.
Yeah.
Vacancy rate 1.62%, so fairly balanced.
Yeah.
Practically in public housing sitting at 3%, so practically nothing there.
Yeah.
And an ERSAT score of 2,
which
I think will also improve in next year's census.
So what I'm getting at right now is Melbourne is very, 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 very similar to Sydney, where you know what, you're going to invest there now for good capital growth rather than the rental yield. There's not going to be much rental yield there.
No, there'll be hardly any rental yield there.
Yep.
And what you're essentially investing for is the scarcity of the land.
Yep.
So suburbs that we're talking about today, whether it's Sunshine West, Broadmeadows, Meadow Heights, Frankston North, they're all landlocked.
Yep.
And so the only thing you can change are the houses on them.
Yep.
There's no new land being built. And so you will essentially be buying a piece of land in that suburb that's landlocked. And all the suburbs around it are also landlocked, which only economically means as Melbourne grows, housing stock is limited for established houses, and therefore these prices will grow.
Sure. Okay. So, mate, look, now talking about all this, okay, the one thing that I'm going to be worried about is always going to be rental yield for our clients. Yeah? Okay. So, look, what I say to a lot of my first-time investors is, hey, do you know what? If you can afford for that negative gearing, because what I mean by that is, hey, do you know what? If your net rental yield is 3%, but your cost of funds is 5.6%, therefore you're going to be short 2.1% on negative gearing. Okay. Even if you borrow 80%, okay, you're going to be short, all right? So what I say to a lot of my clients is, mate, unless you can afford it, you wouldn't do that. You wouldn't do that. But if you can afford it, you will, because that's where you can leverage and buy another property, right? So what I say to a lot of our clients is, and what we plan for some of our clients is, you can buy your first investment property where it's got good capital growth. For example, Frankston North, Frankston, where it grew by 20% the last financial year, last calendar year, 12 months, okay? So therefore, do you know what? Now you got that $120,000 there equity, they can leverage you off to buy your next property.
Correct.
Now, this is where your next property is very important, right? In that it becomes cash flow purposes, right? So you can't buy something that's very high negative gear if you can't afford it. So what do you do for some of our clients is you buy something with a higher rental yield.
That's right. And I think it's all part of a property strategy, right?
Yeah.
You essentially go into this looking for chasing that capital growth. Once you've gotten that capital growth, you've unlocked a little bit of it, you look at yourself and you say, can I go again with the same strategy?
Yep.
Some people or some families on high incomes, they can.
Yep.
Others, they say, okay, look, we need to sacrifice a little bit of capital growth for rental yield.
Yep.
And there's a whole bunch of states that are juicing up for that right now that both Tony and I have talked about in the past. So you can watch some of our videos to get clued in. But rental yields like 4%, 5%, 6%, they're still out there and should probably form the next part of your strategy.
Right. So one negative that I got about Melbourne is the land tax. Okay. It is a negative, but it's a cost of doing business.
Bro, what land tax? Like, I mean,
So what was your land tax? So how much did you pay for Frankston?
1,700?
1,700, which is not bad. It's peanuts. Look, I want to say it's peanuts, but it's not much comparison to, if your growth is 120 grand.
Why do we need media articles about the land tax, right? When the land tax is $1,700.
And that's something a lot of people don't understand how much land tax is. They just see it as a tax and it's a massive negative, right? But to me, it's a cost of doing business. It's a cost of doing business, right? So if you're paying land tax of 1,700 a year, but your wealth just grew by 120 Gs, mate, net that off, that's 118 Gs.
I still got 99% of the increase. I paid 1% to the government.
There you go, guys.
Happy with that.
Yeah, you're happy, right? You're happy. So, mate, before we finish off, what are some areas that you're looking at in Melbourne that are sleepers? Okay, because not everyone can afford your 800, 850, 900, yeah? Let's be real. Not everyone can afford it. If you're renting in Sydney or wherever you want to, you're living in, or you have an owner-occupied property already, owner-occupied loan, and your cash flow is strapped, and you can't afford your 850, 900, what are some good areas that you're looking for your clients that more or less has better rental yields than 3.5% in Melbourne?
One sleeper area that doesn't come up often, sometimes glimpses on the data, but then disappears, is Sunbury. I was there a month ago.
Whereabouts is Sunbury?
Sunbury is about 40 kilometers away from the CBD and about 18 kilometers away from the airport. It's
okay, so it's
northwest.
Up. Yeah,
yep.
Okay, yeah.
No, northwest.
Yep.
That's right. Beautiful part of town.
Yep.
The reason why it doesn't glimpse on the data is because there are acreages there. There are new houses on small plots of land there, and there are established houses on large blocks of land there.
Yep.
And so for somebody in the $500,000 to $700,000 range, you can get a house which has future development potential in the backyard in terms of a granny flat, in terms of even a whole nother house in there if you buy correctly. And you can still get off the mark that 4% rental yield.
Sure. Okay, so let's talk about the growth rate of Melbourne as a whole now, all right? So let's talk about the top 10. That's grown by more than 10% or 12% for argument's sakes, okay? So what do you see how the market's going to run in the next 12 months? What do you think?
I think it's anyone's guess, so I'll probably put out 3 scenarios. Scenario number 1, no rate changes at all, right? In that scenario, I think Melbourne will still grow overall at probably the same rate that it grew this year, 4.7%.
Yep.
4.7 to 6%. Some of these affordable suburbs will see greater growth than that, probably more than 10%.
You're talking about the lower end properties, yeah?
The lower end properties, right?
Yep.
So anything that's a sub 800K mark will probably rise up to that 800K median and cross past it. The others will probably start to slow down just a little, but not
the more
too
expensive
much.
properties, yeah, you're talking about. Well, that's standard, right? Because you're going to reach that median income threshold for the local area. It's not going to keep on booming. Correct. You're not going to be on 100 grand each and buy a $2 million property.
And then I think, is scenario 2, if we have 2 rate cuts, right, throughout the year, I think Melbourne on its own will probably touch more than 5% and probably get closer to 10%.
Yep.
And some of these more affordable suburbs will see 15, 20% increases.
Yep. I don't think we're going to have 2 rate cuts, mate.
Right. And then the most likely option here in January 2026 is 2 rate hikes. Now, if we have 2 rate hikes, I think Melbourne overall will probably stay flat.
Yep.
Right. Some of the suburbs that we talked about, Frankston North and a few others will still increase nonetheless, but they'll have a bit of a slower year.
Sure.
Right. And you won't see the 20%, 19%, 18% numbers. You may see something in the 10 to 12%.
Sure.
And that's purely because affordability.
Sure.
Even first home buyers that are getting in now, if they had an 800K budget last year, income remained the same, but in 2 interest rate hikes kicked in, suddenly they can only afford probably 750. And so that's the nature of life. That will slow down property price growth, or maybe they'll look at a different suburb and that suburb will get some property price growth. So expect the list to look very different next year than it did to last year, but winners are still winners.
Yep.
And that's shown in the 10-year history of each of these suburbs, which all exceeds over 75%. Ladies and gentlemen, we hope that was a very valuable insight into the Melbourne property market, and we hope that guides you on your journey. If you ever want to reach out and chat about property, I'm your biggest fan. You can hit us up and book a obligation-free call at propspotter.com.au. Until next time.